The millennials and Gen Zers are navigating some interesting times. Maybe you've finally been able to buy that first home of yours, or you've tied the knot with your special someone, or you're welcoming a new member to your family. Whatever it may be, it's an exciting time for you that is also laden with responsibility. We can all hope for the best, but what if something were to happen to you? How would your spouse and kids manage financially without you? The simple answer is with a life insurance policy. While you might think that life insurance is a scam, it can prove to be a critical tool in your financial toolbox, creating a safety barrier for your family. It makes up a base of the financial pyramid, so something that should be taken very seriously. Let's explore life insurance in more detail. So what is life insurance? A life insurance policy is a contract between you and an insurance company to transfer risk. You pay a regular amount called a premium to the company, and they agree to pay out a certain amount of tax-free money called a death benefit upon your death to the beneficiaries to help pay down your debts and taxes. It's a safety net for your family. While life insurance isn't mandatory, it's always a good idea to have, especially if you have dependents relying on you for income. Let's explore the ways that you can use life insurance. Income replacement. If you are the primary income earner or contribute significantly to the family, your income is vital. Life insurance can help replace that income, allowing your family to continue their lifestyle in the event you were to pass away suddenly. Debt coverage. That mortgage you just got? Car loans? Student debt? Life insurance can cover all of these so that your family isn't burdened with your debt and won't be in a situation where they could lose the family home. Childcare and education costs. Let's be honest here, raising kids is not cheap. Education, extracurricular activities, clothes, food, it all adds up. Life insurance will provide coverage for all of these costs. Funeral expenses. It's expensive to die. Here in Canada, funerals and burials can cost up to $25,000, depending on the service. Life insurance can cover these costs in a heavy time, removing one less burden from your loved ones. Peace of mind. Knowing that your family will be taken care of in case you pass away can really put you at ease. You can go through life knowing that you've eliminated the big what if in your life by having insurance. Key life insurance terms explained. Now, before you get a life insurance policy, it's important to understand some key terms that are consistent with all life insurance policies. Premiums are the regular payments that you make to the insurance company. Think of it as a subscription fee for peace of mind. Death benefit. The tax-free lump sum payment that the insurance company pays out to your beneficiaries upon your death. The core purpose of the policy. Life insured. The person that the life insurance is for and is triggered upon the life insured's death. Beneficiary. The person or people that receive the death benefit from the insurance company. This could be a spouse, child, or even a trust. It's important the beneficiaries listed on the policy remain up to date in the event of a major life change, such as a marriage, birth of a child, or a divorce. Cash value. Some policies offer an investment component within a life insurance policy that grows tax-deferred over the course of the policy's life. Types of life insurance. Now we have an idea of what life insurance is and some basic terms. Let's go over the different types. In Canada, there are two main types of life insurance: term insurance and permanent insurance. Term insurance. Think of term life insurance as renting an apartment. You get coverage for a specific period of time or term. If you pass away during the term, your beneficiaries will receive the death benefit. If it expires and you're still alive, you have the option to renew the coverage or let it expire. If you decide to extend the term or renew the term, you'll have to pay a new premium that could be significantly higher than before, given your age. Typically, term insurance is good if you have a specific need that needs to be protected for a certain period of time, such as the life of a mortgage, or in guaranteed time for alimony payments, or have a very limited budget. Pros for term insurance include the affordability aspect. Since you aren't covered for life, and only for a set time, your premiums are much more affordable than, say, permanent insurance. Term insurance policies are also simple and straightforward. There aren't as many different features with the term insurance as opposed to the permanent life policies. Finally, term insurances can be used for specific needs, such as getting your kids through university or paying down a mortgage. Once those obligations are done, you may find that your needs are significantly reduced. The two main cons for term insurance are the term lengths and the lack of cash value. Once your term expires, you won't have coverage and you may need to renew at a higher premium or look into a new policy completely, depending on your needs. As for the cash value, term insurance doesn't offer any investments outside of the policy. It's simply the death benefit and nothing else. Permanent insurance covers your entire life, as long as you're paid up on the premiums. With permanent insurance, you can also accumulate a cash value component, which grows over time in a tax-deferred policy, which you can access at any time. There are two main permanent insurance policies, both with pros and cons: whole life insurance and universal insurance. Think of whole life insurance as a fixed-rate mortgage. The payments will remain the same for life, and the cash value grows at a guaranteed rate. The pros for whole life include stability of premiums and the cash value that grows throughout the life of the policy. The main cons for whole life are the fact that it's more expensive in the beginning as opposed to a term insurance policy, and provides less flexibility, given that it doesn't have a predetermined end date. Whole life insurance policies are good when you don't know when your needs will end, such as estate planning, or if you want to have some kind of guaranteed savings that isn't easily accessible. Universal life insurance is a bit more complicated than whole life. It's like a variable rate mortgage with an investment account attached to it. You can choose how much premium you pay beyond the minimum, and you can decide where the rest of the premium goes for investment purposes. The minimums can vary over the course of the policy, unlike the whole life, where the premium is set for life. Given that you can choose how your cash value is invested, it can affect the cash value as well as affect the death benefit. With a universal life policy, these can be good if a family wants to assume some risk and invest the funds their own way, as well as use the cash value for retirement. The cons are mainly the added complexity of a universal life policy, the non-guarantee of the cash value, and can become more expensive than a whole life policy if it's not managed properly. Now you're probably wondering, what policy is right for me? Well, it's going to come down to several factors. Firstly, your budget. How much can you comfortably afford? Second, your financial obligations. What are your debt levels currently, and what are your future expenses looking like? You have to also look at your long-term goals. Are you looking for something that will provide temporary coverage, or are you looking for something that has no predetermined end date? Do you want to have a savings/investment portion to the policy for increased growth potential, or is that not something that you're interested in? And finally, your health. Your current health and medical history plays a huge role in the cost of coverage and may even impact your eligibility for coverage as a whole. There are several large factors to consider when it comes to life insurance. Given the complexity of insurance, it's best to sit down with someone that's licensed to help you assess everything and find the right policy that works for you. If you found this video helpful, then be sure to like and subscribe to the channel and maybe watch one of my other videos. Thanks for watching, and I'll see you in the next one.